Hi everyone, welcome to today's trade of the day, and for today's trade of the day we will be looking at the Kiwi dollar. Right, the Kiwi dollar has a very interesting configuration on the 4 hours. Okay, some would actually say that the Kiwi dollar is trading within a pretty broad range, right? So seems like it's really in a pretty broad range. Okay, I would not call this a channel because it's not really parallel lines. However, what is interesting is that we can see that there is a clear structure forming, that prices are making lower lows, okay, lower highs, and possibly could be making lower lows, right, to this level before any chance of another bounce up. Okay, so now that we have this concept in mind, right, now that we have this concept in mind, we can have a possible long-term target, okay, somewhere in line with the trend line, right? So price could very well fall down and drop to this long-term target over here, right? So this can be a possible long-term target if we were to do a retracement. Okay, I'm thinking it would be around the 7860 level, right? So this is the 7860 level right here. So this, if you ask me, would definitely be a zone. By the time price doesn't move in straight line, right? Price actually would drift. So by the time it drifts down, it could be around the 7860 level. So that's the long-term target that we have. Let's quickly go down to the 1 hour. I'm going to remove this trend line so you guys know where we are getting the level from. And if you look at 7860, there is actually, I'm just going to adjust, there is actually a graphical overlap support over here, okay, where price actually reacted. Okay, so we're going to adjust our long-term target over here. And very quickly, of course, we can have a shorter term intraday target at the last swing low over here, which price actually touched not just twice, but if you extend it further back, okay, price actually tested this level 3 times, so very strong level. So intraday target here, and then expect price to go to the final long-term target. Alright, so now that we have our targets, the question is, where should our entry be? Okay, we can actually draw a trend line connecting the recent highs right over here like that. Okay, so it's a descending bearish trend line, descending trend line. As a completed movement, we can use Fibonacci retracement from the high to the low and open off Fibonacci ratios. I'm looking at the 50%, 61.8. 61.8 has been tapped, so 50% could be a very nice entry. We also see that negative 27 is in line with the 7860. Okay, so I'm just going to highlight all these levels here and my 50%. Okay, so we have a very clear entry around here, right? Not at a 50%, but just slightly higher, right? So really this is a zone. Okay, this is a zone. We can use this as an entry. I'm just going to draw a box to show that really this is an entry zone for me. Alright, and then the question will be, where will the stop loss be? Right, the stop loss will be just outside of this area above the next market structure. So stop loss will be somewhere over here. Okay, the reason for stop loss is to know for sure that our trade has gone wrong, our bias has gone wrong, and we are no longer bearish. Okay, last but not least, we can also look at the moving average. We can see that price is below this 34 EMA, right there, in line with the descending trend line as well. So thanks everyone for tuning in to today's trade of the day on Kiwi dollar. Wish you guys all the best, trade safe, stay safe, and I'll catch you guys again. Thank you.